Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're going to be taking a look at the Aussie dollar because this morning, or well, during the Tuesday Asia Pacific session, we had the first of three major G10 central bank meetings this week, and it was the Reserve Bank of Australia, and we did see some volatility in the Aussie dollar. So, I mean, I'm going to show you the chart and then I'm going to sort of talk you through what's happened. So this is Aussie dollar on 4-hour candlesticks. And as you can see, it has been recovering in the last couple of weeks. The dollar's been getting a bit weaker in recent weeks, if you remember, and commodities have been strengthening, which has helped it recover from these lows back here in August. We had this pop above this key area of resistance, 0.7425-ish. That was last Friday. That was on that worse than expected US payrolls for August report. Then we kind of consolidated at the start of this week, but then look, we've seen a bit of volatility in the last couple of hours. It was initially in response to the RBA. It was a spike higher, but now we've moved lower. And as you can see, we've actually broken below this uptrend that had been in place since the 20th, which could potentially, from a sort of technical perspective anyway, open the door to a bit further downside. You got the 50 DMA here around 0.7365, and then you got another area of resistance which is kind of in the low 0.7300 kind of to 0.7275 area. That's the 21 DMA, and just some areas of support pretty much that have been important in the last couple of weeks. So yeah, what happened with the RBA? Why did we see that spike higher, and why are we now moving lower? Well, back in July at the last RBA meeting, the bank said it signaled to markets that in September we're going to taper the weekly pace at which we buy bonds from 5 billion Aussie dollars worth of government bonds to 4 billion Aussie dollars worth of government bonds. That's what they said they were going to do in September. Okay. Now, given the deterioration in the health situation to do with COVID in Australia, you know, they've had infections going up. They've had they still have these very strict lockdowns in Sydney, Melbourne, Canberra, other parts of the country, which are expected to mean that in Q3 the Australian economy is going to see a big contraction, and probably not even going to see any economic growth this year. Given that pretty big deterioration in the economic outlook for the country, there'd been some speculation that this planned taper of QE purchases for this month, for September, was going to be delayed. However, the RBA didn't delay it. Okay, they said we're going to go ahead with dropping our weekly purchases from 5 billion to 4 billion this month, and they basically reasoned that some thought this was a little bit optimistic, perhaps a little bit hawkish, but basically the RBA reasoned that the current health situation, the lockdowns, rather than derailing the country's economic recovery, it's just delaying it. And they do expect rising vaccination rates to help the economy recover in Q4 and in 2022. I would say that it's a little bit more uncertain than that. But anyway, that's why you have this initial spike higher in Aussie dollar to highs overnight. Where did we get? We got to a high of 0.7468, which was just a whisker off last Friday's high. So why did we reverse? Well, a lot of people have framed this as a dovish taper. Yes, they did choose to taper, but here's another key point. The RBA, in July, when they sort of outlined this taper timeline, they said that we're going to taper purchases in September to 4 billion, and then in November we might taper them again to 3 billion. Well, the RBA has signaled that this next taper step, which would take purchases from 4 to 3 billion, that's not going to happen until at least February. So that's a big delay from November all the way to February. That's like a 3-month delay, which means overall, in terms of the total number of bonds that the RBA ends up buying, it's actually, although they've signaled that they're going to reduce the weekly rate at which they're buying these bonds, they're going to end up buying a lot more. So it's actually net dovish, really, isn't it? And then, of course, the RBA also reiterated to markets their dovish guidance on interest rates, saying they're not going to do any rate hikes till 2024, which is means that the RBA is probably going to be one of the slowest G10 central banks to start hiking rates. But yeah, all of those factors sort of combined for this being a dovish taper, which is why we've seen this downside. Really though, for the Aussie, for the rest of the week, I would suspect that sentiment's going to be now become a function of risk appetite. So what's happening in commodity prices, what's happening with the US dollar, what's happening with stock markets. And as long as all of that is stable, I'm thinking we probably should see the Aussie dollar retain support for now. But over the next couple of weeks, if the health situation continues to look bad, like lockdowns still bad, infections still rising, a lot of panic, well then you could, in my mind, as long as the dollar permits and continues or doesn't strengthen too much, you could see the Aussie dollar moving back to this kind of area. But anyway, yeah, guys, hope you enjoyed the video, and I'll see you all in the next one.